Relative Strength Index, RSI, indicator for MetaTrader 4. The Relative Strength Index, technical indicator, RSI, is a price-following oscillator that ranges between 0 and 100. When Wilder introduced the Relative Strength Index, he recommended using a 14-day RSI. Since then, the 9-day and 25-day Relative Strength Index indicators have also gained popularity. A popular method of analyzing the RSI is to look for a divergence in which the security is making a new high, but the RSI is failing to surpass its previous high. This divergence is an indication of an impending reversal. When the Relative Strength Index then turns down and falls below its most recent trough, it is said to have completed a failure swing. The failure swing is considered a confirmation of the impending reversal. Ways to use Relative Strength Index for chart analysis: tops and bottoms. The Relative Strength Index usually tops above 70 and bottoms below 30. It usually forms these tops and bottoms before the underlying price chart. Chart formations. The RSI often forms chart patterns such as head and shoulders or triangles that may or may not be visible on the price chart. Failure swing, support or resistance penetrations or breakouts. This is where the Relative Strength Index surpasses a previous high, peak, or falls below a recent low, trough. Support and resistance levels. The Relative Strength Index shows, sometimes more clearly than price themselves, levels of support and resistance. Divergences. As discussed above, divergences occur when the price makes a new high or low that is not confirmed by a new high or low in the Relative Strength Index. Prices usually correct and move in the direction of the RSI. Calculation: RSI 100, 100, 1 plus UD, where U is the average number of positive price changes. D is the average number of negative price change. Test the trade signals of Relative Strength Index indicator. Buy signal reverse behind the oversold level. The oscillator turned upwards, and its value at the analyzed bar is behind the oversold level. Default value is 30. Failed swing. The oscillator rises higher than the previous peak at the analyzed bar. Divergence. The first analyzed bottom of the oscillator is lower than the previous one, and the corresponding price bottom is lower than the previous one. Double divergence. The oscillator formed 3 consequent bottoms. Each of them is higher than the previous one. And the price formed 3 corresponding bottoms, and each of them is lower than the previous one. Head-shoulders. The oscillator formed 3 consequent bottoms, and the mid one is lower than the others. Sell signal reverse behind the overbought level. The oscillator turned downwards, and its value at the analyzed bar is behind the overbought level. Default value is 70. Failed swing. The oscillator falls lower than the previous bottom at the analyzed bar. Divergence. The first analyzed peak of the oscillator is lower than the previous one, and the corresponding price peak is higher than the previous peak. Double divergence. The oscillator formed 3 consequent peaks. Each of them is lower than the previous one, and the price formed 3 corresponding peaks. Each of them is higher than the previous one. Head-shoulders. The oscillator formed 3 consequent peaks, and the mid one is higher than the others. Thank you for watching. If you found this video useful, make sure to subscribe so you don't miss our upcoming content.